Welcome back, ladies and gentlemen, on this smashing Sunday for what is going to be nothing short of another jam-packed daily market update. And today, we are going to be delivering some hard-hitting truths when it comes to retail participation in the cryptocurrency space generally. And actually, this is a very interesting exercise. And we're going to link looking at Google Trends, which is a great barometer for retail interest, to a criticism Jim Bianco made in regards to Bitcoin as an ETF, or Bitcoin having an ETF being largely a failure. And he essentially, and I do think there's an element of truth in what he's saying here, and it's a take, so I can't, everybody's entitled to their own takes, and I think Jim Bianco is amazing in many, many areas as an economist. He's been right on many things. I always personally like listening to his takes, but he's essentially putting forward the argument that it's a lot of old money here. There's no new money coming into the space. And actually, I think when we look at Google Trends for Bitcoin, it shows ultimately the institutions are the drivers behind this. And that's why Bitcoin's gone and put in a high pre-halving. And that's why the altcoin market, which largely has not benefited at all from any institutional inflows other than what we see coming in from coin shares every now and then, largely in the form of actual ETPs like Grayscale Digital Large Cap Fund, which we know is going to get an ETF. There's ultimately altcoins in that. It's a barometer for them doing well. But we're going to be relating sort of retail sentiment, taking a look at where it is, relating it to Jim Bianco's comments, looking at a pushback from Eric Balanchunas. Then we're going to look at the price of Bitcoin as a barometer for the broader space, relating everything to the altcoin market in regards to retail interest, and then finish things up on what is going to be a pretty interesting week from an economic point of view. Also, we're marching into an election. There's an angst with the markets. You can see that really represented in regards to the 10-year yields in the United States. But we'll break it all down. Don't you worry. And let's start things off with Google Trends. Now, Google Trends, I believe, is a great barometer for retail interest in the cryptocurrency space. Where do people go when they want to find out about crypto? Google. And YouTube, our own personal, we can be a barometer also in the sense that in regards to certain topics like HBAR, we still absolutely love Hedera, by the way, guys. I know there's many of you struggling, as I am, with my portfolio right now, having bought. We've really been averaging in throughout this bottom, but it's one of my underwater bags, unfortunately. However, we get some of the most viewed content for certain topics, HBAR, ICP, sometimes XRP, etc., etc. And the sentiment is just not there, in terms of viewership and interest. But we love what we do, and that's ultimately why we do it. And we do think that there's going to be a sort of return in a big way. But people, I think, don't really have the foresight in regards to understanding where this market is going. They kind of want to get on the train once it's already left the station, if that makes sense. People will only start to get attracted when we're back at those sort of all-time highs or in that sort of FOMO mania phase. And actually, I believe you want to be positioned in the markets. We would look at a phase one kind of base at the bottom of the market, not at the top. Ready to sort of capitalize on that uptrend, whether that's after Wyckoff's accumulation, our phase one base is what we look at, or Dow Jones is kind of insider sort of positioning. So if we look at Google Trends, look at this. This is Bitcoin, and we're going to relate this straight away to a comment from Jim Bianco. Again, I like Jim Bianco. I think he's great, in fact. But we're at 18 here. We were only lower than this. I believe this was around the FTX crash. And the interesting thing is, this is where Bitcoin's price is. Now, this looks a lot more like an altcoin chart. We'll talk about crypto generally in just a second. But what this perhaps offers is a bit of a pushback to Jim Bianco's comments in regards to he doesn't seem very positive on the whole Bitcoin ETF narrative, even though Bitcoin is the best performing ETF ever in terms of the speed it's taken, or growth, I should say. But he goes on to comment here, like you, I see the regular posts about the spot Bitcoin inflows records, which happened last week, by the way. It's definitely insider manipulation and institutional manipulation going on here. Welcome to the real world, guys. This is how it goes. Life isn't fair. I'm sorry to tell some of you that, but you need to hear it. They are correct. We have never seen anything like it. So why isn't the price going up? In orange, I would argue it somewhat is. And what they're showing here is the accumulative flows throughout this pullback by ETFs. Also, we see whale accounts doing the same thing. There's obviously a link in there with large accounts, a lot of them being ETFs. There's over 1 million Bitcoin in just US ETFs alone. And on top of all of that, we're seeing exchange Bitcoin get drained, which works to both our favor and not. If the demand comes in, it's great. If it doesn't, well, it can slip on low volume. Since the Bitcoin all-time high in March this year, which is, I mean, our portfolio looked insane back there. We had altcoins 700% up. Since then, we'll get there, guys. Don't worry. Spot Bitcoin ETF flows, $12 billion in blue. The halving in April. Trump endorsed July. Tech S&P mania. Bitcoin's still outperforming all of these, by the way. Fed cut. The price should be 100K a month ago. Instead, it's 4% down. At the same time, money has been pouring into gold ETF, $6 billion since March 13, and gold's price is screaming higher, up 25%. Why is gold soaring when Bitcoin cannot go up despite an almost never-ending stream of bullish news? And you can see the correlation here. Gold's going to do very well. We're moving towards a new monetary system, guys, and there's going to be multiple forms of value. To me, the answer is simple. Gold flows are $6 billion of mostly new money. Yep, we can agree with that. Bitcoin flows are mostly on-chain or centralized exchange money, IOW, not new money. Coinbase CFO has this week. Retail is leaving them. We would argue for the ETFs, hence the big inflows. I agree with Jim on this because actually Bloomberg did a report where they looked at the kind of money that was flowing in. And a lot of it is first-time buyers of ETFs that are actually a lot of them preferring BlackRock to custody things than Coinbase. But this is from Coinbase's CFO. Revenue was down 18% from the second quarter as crypto prices went sideways and down after Bitcoin hit its all-time high in March. Many retail traders left the market as price went south. Bitcoin resumes rising in October and is inching closer to its all-time highs, and the price action may lure investors back into the market. That's what this is all about. He goes on to say, Jim Bianco, see the size of the trades. The average gold ETF trade is 72K, consistent with wealth managers' allocations and institutions. Spot Bitcoin trades are only 16K. This seems money shift from former Coinbase retail accounts to ETFs, so it's not new money. I've argued this before. This is the problem for crypto. The ETFs are not attracting new money. They are not the gateway to the boomers on chain. And we partly agree, actually. It's largely money that's already been here. However, there's a bullish and there's always a silver lining in life, and you've got to find that. It doesn't matter how dire a situation is. The world works in very mysterious ways. If you take the bearish stance here, okay, the boomers aren't really adopting it yet, or the large pool of money isn't here yet. However, the positive to that is it still could be to come. And certainly if Bitcoin continues to prove its worth, look at MicroStrategy, look at MetaPlanet, best performing MicroStrategy stock in the S&P 500, the largest stocks in the world, and MetaPlanet in Japan, largest, best performing stock in Japan, all through Bitcoin. Why would you not want that exposure? And this is why we think ultimately that's to come. Instead, they are sucking money back into TradFi accounts. It comes from Coinbase, Kraken, Gemini, hot wallets, and cold storage. No one cares about owning their own keys. I agree. People don't want freedom. And there's been great studies about that in regards to actually people will just take the easy route as long as they've got a roof over their head. They can get by. They've got food. They've got a little bit of money maybe to go to the pub. Not that there's anything wrong with that. People would rather choose that than perhaps a harder path of resistance. And there's been lots of studies on that. I can't think of the study. And if, of course, typical crypto bro, right? I am the source. And if these ETFs keep sucking back into TradFi accounts, they will continue to hurt, maybe damage on-chain investment, as this gives government regulators and TradFi chieftains more and more power over this space. I also agree. I think Jim Bianco's got some great takes, but I think the Bitcoin ETF has been a success in my opinion, and he's going to continue to be a success. So the more glowing posts I see about inflows without new price highs, the more I worry that this is not good for crypto's future. Where are we now? Worried boomers are pouring into gold and its numbers go up. Bitcoin is a zero-sum game of existing money that cannot make numbers go up. It was a good post. He continues to reiterate everything in sort of risk is blasting to new all-time highs. That's not the case. I don't think so anyway. A lot of the large caps are, because I think they're very sensitive to M2. There's no new retail money here, and it's largely been driven by institutional flows. However, those institutional flows are spectacular. You know, there's lots of people constantly trying to clown the likes of Eric Balanchunas, a great guy to follow. Some guy here says, I don't know why everyone is so impressed with these ETFs. They are only brought in $1 billion if you include GBTC selling. The actual figure is about 24 billion. And you can see, you know, it's not quite as high as the VOO and some of these sort of S&P or larger stock ETFs. However, it's unbelievably spectacular for a new asset, and I do think things are to come. With all due respect, sir, we're hovering near all-time highs within days of the election. It's the same crypto cycle. We've also highlighted this, even in regards to where Bitcoin dominance rolls. There's nothing new here, guys. No need to overcomplicate things. Exactly. Keep it simple. Bitcoin was 35K, and in the reputational doghouse, thanks to Sam Bankman-Fried, 16 months ago, when BlackRock filed for an ETF. Since then, it's gone up to 70K and running circles around every asset class despite limited catalysts and several significant dumps, German government, etc., etc. Remember, we looked at that JP Morgan report saying they were bullish. One of the catalysts is the repayment of the FTX funds. Guys, we're on it here. Everyone can see this. He's doing mental gymnastics to stop you from believing your lying eyes. Low costs, liquid, brand name, ETFs are powerful. AF, kind of dumb to bet against that. And he says, actually, it was 25K. So we do think Bitcoin's got done well off of this, but Jim Bianco is raising a good point. And the bullish news there is that sort of boomer flow, if you will, that because the vast majority of wealth is with people 60 and over, unproportionately. And that's because really solely that they've been able to arbitrage and had longer owning assets in a fiat deflationary game, basically. And you guys are just starting and you've got the kind of monetary system. You need to sort of own assets, and this is why everyone should be an investor. It doesn't have to be in crypto. We're not. I always get some smarty in the comments saying, how dare you say everyone should be in crypto? I'm in crypto. I'm willing to take that bet. I think it's going to offer the greatest return. But, you know, just invest in something. You know, all my relatives, all my family, all my friends, I say, get some silver, get a little bit of gold. You know, you don't even have to hold it yourself if you don't want. Crypto, you know, have that as a bit more of a risky pot. If you can buy a property, buy a property. The largest... and everyone's still waiting for the property crash. Never going to happen, guys, until they want it to happen. And then there's likely going to be some rule that's going to get you out of it anyway. The largest threat to property really is government, in terms of, you know, like the one we see over here, and where they're kind of... once they start going through sort of unrealized capital gains, that could apply to property tax and things like this. So Bitcoin, retail is not here for Bitcoin at all. I don't think we're seeing anything that out of the ordinary in regards to how long this kind of stuff takes. And then retail really get in, you know, at the top. You know, so retail largely hasn't rode this upside. And when we look at the crypto space more broadly, I mean, it's a bleak story, guys. You know, but the good news is, in my opinion, you're positioning at the bottom of the market. If you've been accumulating throughout these lows, ultimately ready for retail to become a bag holder of yours. And if we look at, you know, some of our favorite altcoins, one that's just been a real underperformer generally is HBAR. This is what we would identify as a phase one low, or a phase one base. There's ultimately phase two to come. And we think retail participation, I mean, you can look at how similar these sort of charts are, you know. Let's maybe go into the past 12 months, for example. You know, we are really at lows in regards to the crypto space as a whole, and they're not appreciating from the likes of the institutional flows that we're seeing for Bitcoin. However, the good news is, and we've continued to state this, we'll get onto the week ahead in just a second, guys. The good news is, you know, I do believe Bitcoin has broken out of this pull. This nasty wick. I do believe Bitcoin has broken out of this pullback. And this is likely going to, given enough time, just be a pullback, a breakout, a retest, and then you're going to see that continuation off the back end and that marching towards those higher price targets, along with the likes of, I think this could be setting up some sort of continuation. Total 3, total 2, certainly the total cryptocurrency market cap very much has broken out. And we did look at those ETPs as a barometer. I was wondering how Coinbase was doing, actually. Where's the ETP that we want before we get onto the news ahead? Yeah. So this is Grayscale Digital Large Cap Fund. It tracks about 5 cryptos: Bitcoin, Ethereum, Sol, XRP, AVAX, I think. And this ultimately is likely a 10x sort of potential, in my opinion. So the last thing for me to do is to just sort of point out what's going to be an interesting economic week ahead. Most notably for me on Thursday, we've got US initial jobless claims. We've got the Bank of England rate decision expected to cut rates. You've got the Federal Reserve interest rate decision. Let's go look at the probabilities on this. Interest rates expected to be cut at 25 basis point. What do we want? Fed Watch is what we're going to pull up. Yeah. Pretty set in stone that they're going to cut rates by 25 bips. What else have we got in the week ahead? We're likely got more earnings. Obviously, the rate decision is a big one. Bank of England significant for me. Lots of PMIs, lots of UK servicing PMIs, US ISM servicing PMIs, Eurozone manufacturing PMIs. There's quite a lot going on next week. So it could be a volatile one. A market that I'm particularly watching at the moment, of course, crypto, but it really the sort of debt market. So the 10-year yield is something. I'm going to do a quick update for Patreons on that. But that's it from me, guys. The main takeaway from this is retail is largely not here. There's good and bad news in that, just like there's good and bad news in what Jim Bianco is highlighting there in regards to largely this isn't new money because it hasn't unlocked the sort of biggest pool of money, even though it's done spectacularly. The bad news is that it's not here yet. The good news is it's to come. And we very much think that's the case. I think when you look at the charts, actually, if you take a sort of weekly investor mind frame, things don't look bad at all. People want things now when it comes to the crypto space. They don't want to hold any of the chop or the volatility during those ranges. Ultimately, to be then the beneficiary of the sort of uptrends that you enter after, the phase 2 after the sort of phase 1 initial basing. So that's it from me, guys. I'm going to love and leave you on that note. Have a smashing Sunday, and I'll see you all in tomorrow's Daily Market Update.